If you are actually watching this video about how to qualify for your Social Security benefits or understanding how those benefits are actually determined, then you're definitely not alone, because millions of Americans every single day, Andrea, are actually researching the question of how they can qualify for Social Security benefits, and of course how those benefits may be calculated as well. And the reason for this, of course, quite frankly, is that 40 to 50% of most retirees' income, as I mentioned before, will be comprised of Social Security benefits. That is why we created this short educational video to help you understand how to qualify for your Social Security benefits and also how those benefits are calculated. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and stressful process of retirement income planning simple.
Absolutely, Andrea, and we do this by incorporating a team of expert advisors ranging from certified financial planners, certified financial analysts, estate attorneys, insurance advisors, and other needed professionals to help us build a written retirement plan that will let our clients know when, where, and how to take money from their financial savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
Andrea, it's really no secret that when it comes to Social Security benefits, many people are left in the dark about how to qualify for those benefits. And of course, they're definitely left in the dark about how those benefits could possibly be calculated when it comes to their own work record. So we create these short educational videos to help people come more into the light about their Social Security benefits and the many twists and turns that may be involved as it pertains to their Social Security income. So as a fiduciary advisor, I think it's always key for us to continue to educate people around this major benefit source. But before we get into understanding today's lesson, there are two rules that we always give you. And Andrew, what are those two rules to retirement income?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
So let's go ahead and start talking about how you can qualify for Social Security and how those benefits may be calculated for you in the future. So in today's video, as we mentioned, we're going to talk about how you can qualify for your Social Security benefits. Now, I think this is going to be some important information for you to follow, because it's going to help you to understand how do you get to that benefit that they're telling you that you're going to receive at your full retirement age. First of all, when it comes to qualifying for your Social Security benefits, these are some of the things that you're going to need to know. One is that you're going to have to get at least 40 credits to qualify for Social Security benefits. Once you receive those 40 credits, you're in the club. You're going to receive benefits that cannot be taken from you. So once you hit 40 credits, you will be receiving a Social Security benefit. The maximum amount of credits that you can receive each year are 4 credits. And really what that averages out to be is that it's going to take you approximately 10 years or so if you're working full time in order to hit those 40 credits. Another important factor to make note of is that you're going to have to make sure that you're working for an employer who takes out for Social Security benefits. In some cases, and in many cases I would say, if you are a state or government employee, you may not have any benefits being taken out for Social Security, so therefore you may not be eligible for that benefit. As I mentioned a moment ago, you can receive a maximum of 4 credits per year. 1 credit equates to you earning at least $1,470. And when you calculate that for the year, you have to earn at least $5,880 in order to receive 4 credits for that year. So many people may earn this in 1 month, and you will have your 4 credits for the year. But it's one thing you have to make note of: they do not credit those 4 credits in that first month. You only get those credits awarded on a quarterly basis. So, for instance, if a person was getting close to receiving all 40 credits, let's just say they were working and maybe they stopped and they wanted to take care of a child and they went back into the workforce and they were really close to receiving 40 credits, and unfortunately something may have taken place where they passed away in the 3rd or 4th quarter, Even if they had made enough income to qualify for all 4 credits and get them to 40 credits for the year, they wouldn't receive them because you have to be alive for all 4 quarters in order to receive all the credits for that year. So beyond that, so there is an age requirement for you to actually receive Social Security benefits. Of course, we talk about this extensively. You have to be at least age 62 or age 50 if you are qualifying for Social Security disability. From 66 to 67, depending on when you were born, between that time frame, that is when you can receive your full benefits without any reduction. We know that if you take your benefits early, you will receive a reduction. It's going to be a permanent reduction on your benefit record. But if you wait till your full retirement age, which can be from age 66 to 67, depending on when you were born, you will receive all of your benefits or 100% of your benefits. Now, from your full retirement age to age 70, you will qualify not only for your full benefits, but you'll also receive your delayed retirement credits of 8% per year up until age 70. The last thing that you have to do in order to make sure you get your Social Security benefits, and this one that may not even be so obvious, but you have to file an application. Social Security is not going to come knocking on your door. Social Security is not going to call you and say, hey, ma'am or sir, it's time for us to pay you. You must file an application to start receiving those benefits. Now let's go ahead and get into how they're going to calculate your benefits. There are 3 things that's going to take place here. One, they're going to adjust all of your FICA wages for inflation. The second thing they're going to do is that they're going to add your highest 35 years of earnings, and they are going to divide that by 420 in order to get that into a monthly benefit. And then what you're going to get a percentage of what they call your AMI, your average index monthly earnings. One of the things that I do want to make note of is that when we're talking about the indexing factor of your earnings, the Social Security Administration is only going to index that up to age 59. After age 59, they're only going to use an index factor of 1. I really think that it's important for everyone who's tuning into this video to go out and create a mysocialsecurity.gov account so you can see what your earnings are up until this point. Sometimes there can be a mistake, so you want to make sure that they are calculating all of your years of earnings so you don't have any factors that's going to be calculated that's lower than what you should be receiving. But I did put a link in this video that will take you to the Social Security website, and you can go ahead and set up your own My Social Security account, and you will be able to see all of your years of earnings, and you can also look at your indexing factors of those earnings as well. But once they get that, they divide it by 420, and you get this thing known as your AMI, your average index monthly earnings. So when it comes to calculating your monthly benefits and how much the Social Security Administration is going to pay you, they use this little formula known as band points. Now, if you look at the percentages here, the 90%, the 32%, the 15%, we have seen this consistently stay the same. But the benefit, the calculation numbers that I've highlighted are things that they have changed over the years. If you go back to 2020, you will see that these numbers that I've highlighted in the calculation of 90% and 32% were actually lower. But they've raised these calculations for 2021. So let's go ahead and see how they would calculate your benefits in these 2 examples that we're going to talk about today. In example number 1, we're going to use a hypothetical earnings record of this person here earning $2,220,000 for their highest 35 years total earnings. And then we're going to take that and divide it by 420, and this gives us a AMI, an average index monthly earnings of $5,285.71. And so when we start to now compare the band points and how they're going to figure your monthly benefit, this is how they're going to do it. They're going to take 90% of that $996, which is going to give you $896.40. Then we're going to move to the second band point. They're going to look at 32% of your AMI minus the $996, which is going to come out to $1,372.71. And then we take a look at the third band point. Now, as you see here, that third band point is calculated by taking the AMI minus the maximum amount in the second band point of $6,002. But because the AMI is actually lower than that amount, you do not qualify for that third bend point. And therefore, there's nothing calculated for you in that bend point. So basically, when they look at your PIA, your primary insurance amount, what you will receive at your full retirement age, they're going to take that $896.40 plus the $1,372.71, and your monthly benefit at your full retirement age would be, in this example, $2,269. So let's go ahead and move over to example 2. Let's show a different variation of how this could work. Let's say your highest 35 years in this example was $4,500,000. So we're going to take that and divide it by 420, and now your AMI is $10,714.29. We're going to go through the same exact process of calculating what your PIA would be in this example. We're going to take 90% of the $996 bend point, and you get the same, of course, $896.40. Then we're going to take 32% of the AMI high point. You can't get over this $6,002. So they take the maximum amount in that second bend point, and they subtract the $996 in this example, and it comes out to $1,601.92. Now we do meet that third bend point criteria. Now we take that AMI minus the $6,002, and it comes out to $706.84. And we do the exact same thing. They add up the $896, the $1,601, and the $706 to give you a total PIA or primary insurance amount at your full retirement age of $3,205. So I really hope that this video also helped shed some light on how you can qualify for Social Security benefits, and also how those benefits will be calculated for you in the future. If you have any questions or concerns about any of the information that we've shared with you today, please feel free to reach out to our office and let us help you understand how your own personal situation could be affected.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement income. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.